Oil prices remain elevated tonight, even after slipping back on Thursday, as fighting in the Persian Gulf disrupts one of the world's most important shipping lanes. U.S. and Iranian forces traded strikes for a second straight day this week, and new data show that traffic through the Strait of Hormuz was cut in half on Wednesday as the violence flared back up. President Trump said the latest American strikes, which hit around 90 sites along Iran's coast, were retribution for Iran's attacks on commercial ships passing through the Strait, a waterway that carries a huge share of the region's energy exports. Iran's top negotiator, Mohammad Bagher Ghalibaf, pushed back hard, saying the Strait, quote, will open only under Iranian arrangements, not American threats. The disruption comes just as the Strait had begun to recover. The International Maritime Organization had recently urged shipowners to steer clear of the area, but traffic had ticked up after the United States and Iran signed a ceasefire last month. That truce now looks shaking. Mr. Trump said Wednesday he thought the 3-week-old deal was, quote, over, though he later suggested Iran might still be open to talks. Iran, for its part, has said nothing publicly about new negotiations. The numbers tell the story. On Wednesday, just 25 ships passed through the Strait in both directions, according to the maritime data firm PLR, down from 49 the day before. That's still more than the handful of vessels that dared the crossing at the height of the war, but it's a steep drop from the pre-war norm of more than 130 ships a day. Most of the ships that did make the trip this week stuck to what's known as the Iranian corridor, which Tehran insists is the only safe route. Shipowners generally avoid the middle of the Strait because of the risk of mines laid by Iran's military. Only one vessel took the alternative route through Omani waters, where the U.S. Navy has been offering guidance. And even these figures may not tell the full story, since many ships have simply switched off their location trackers during the conflict. Analysts say neither side benefits from choking off the Strait entirely. Ben May, director of global macro research at Oxford Economics, put it this way: it's in neither side's interest for traffic through the Strait of Hormuz to grind to a complete standstill for a sustained period. He added that it's too early to know whether the current turmoil will keep pushing oil prices higher, since the ceasefire will probably keep flickering on and off. As for prices, Brent crude, the international benchmark, slid to around $76 a barrel on Thursday. Before this week's fighting broke out again, prices had actually fallen to $70 a barrel, just slightly below where they stood before the war began. West Texas Intermediate, the U.S. benchmark, eased to around $72 a barrel. That's the latest from the Gulf. We'll keep tracking how this plays out for global energy markets.